I'm Jen Blanchard. Welcome back to my channel. If you're new here, I'm the team leader of the Blanchard team at Berkshire Hathaway Home Services, Fox and Roach Realtors. Our office is in Basking Ridge. We cover all of central New Jersey, and if you want to go further, we've got people for that too. By now, you've probably heard whispers of a potential Fed rate cut this month. What does that really mean for you if you're buying or selling a house here, there, or anywhere? Let's break it down, data first. Here's what Jerome Powell said. Jerome Powell is the chair of the Federal Reserve. When they were in Jackson Hole last month for their summer meeting, he signaled that the Fed is leaning towards a September cut. This is in response to downside risks of unemployment and inflation. Major banks like Barclays, Deutsche Bank, BNP Paribas, they quickly pivoted to forecasting cuts in September and December. CME Fed Watch now is showing an 87 to 92% chance of rate cuts in September and December of this year. Morgan Stanley, however, calls the odds of a cut closer to 50-50. They're citing a healthy financial situation, strong GDP, stable employment, and controlled inflation. Consumer spending via the PCE index shows growth, but it also shows that inflation remains above target. We're seeing some mixed signals. If you know me, you know that I really don't like to talk about politics, but it would be inauthentic of me if I didn't acknowledge the fact that there are definitely some political crosswinds going on, as illustrated by the facts that I just told you about the different organizations having different opinions on whether or not we're going to see rate cuts. There's ongoing political drama at the Fed, especially involving Governor Lisa Cook's legal challenge to her dismissal. Markets are very wary about how that's going to impact the independence and therefore decision-making of the Fed. So as I said, those of you who know me know that I don't like to talk about politics, but it is important to indicate that there is some influence going on here. So we'll talk about it, but we're not going to dwell on it. So let's get to the crux of my message today. What does all this information about Fed rate cuts mean for central New Jersey real estate? Any Fed rate cut generally lowers short-term borrowing costs, but mortgages are more tied to 10-year Treasury trends because, as you know, you don't take out a 3 or 4 or 5 year mortgage. You take out a 15-year loan or a 30-year loan. So even if the Fed cuts rates, don't expect a dramatic drop overnight. Still, even a small cut will improve affordability, even if it's only slightly. That signals a more favorable lending environment. Smart buyers should watch for local opportunities sooner rather than later, which brings me right back to supply and demand. Lower borrowing costs might bring more buyers into the market, but here locally, we are still in a pretty strong seller's market. You'll have to watch my other video to understand why our area trends a little bit differently than national. But in Basking Ridge and our nearby markets, inventory remains tight. Softer mortgage costs, though, as I said, they're going to unlock more demand possibly, which means more buyers. So if you're looking for a home in a tight inventory market, even if interest rates are a little bit lower, prices might rise. Keep an eye out on jobs reports, CPI metrics. Those are things that will strongly influence the Fed and whether or not they're going to proceed with these Fed cuts or if they're going to remain steady. And for more information on what's happening locally, you're going to have to reach out to me. You can drop a comment on this video and I'll start the conversation. Since recording this last week, the August jobs report came out. Remember I said that we should keep an eye out for that. Only 22,000 jobs were added. That's way below the expectations. And unemployment is climbing. It's now at 4.3%. That's the highest it's been since 2021. Markets now see the Fed cutting rates at the next meeting pretty much a near certainty. Some are even flirting with the idea that it might be a 50 basis point cut instead of the usual 25. But inflation data, that's not out yet, right? The CPI report, that's coming up. We'll have to update you when that comes out. That could prompt the Fed to reconsider the size or the pace of the cuts. The bottom line is, with these numbers coming out, It definitely moves the needle a little bit more, pointing towards an easing of rates, but how much it loosens it is going to depend on how inflation behaves next. So if you're watching the market and trying to time your move in Central Jersey, don't wait. Give me a call. Let's figure out how these numbers might impact you. But whether it happens or not, whether it's 25 basis points or 10 basis points, it's all about local timing and strategy in this market. If you're thinking about buying or selling in Central New Jersey, let's talk now. I'll help you position yourself to win. No hype, just clarity. Thanks so much for watching this video. And if you know someone who could benefit from this information, please send it to them as well. Subscribe to my channel, hit the little bell. You'll be notified every time I post a video. Thanks again for watching.